Hello, everyone, and a very warm welcome to this Friday's June the 16th cryptocurrencies update. On Wednesday, I showed you a rock climber going down, and today I am showing you a rock climber going up, but hanging in there, because it looks like we might have a bottom in place for at least Bitcoin and Ethereum. Remember, on Wednesday, I was still looking lower, and Ethereum and Bitcoin bottomed on Thursday, very close to the target zones that we had set forth a while ago, and then ratcheted them up. I remember on Wednesday I said 20,000 and realized I made a typo. That was 23.5, plus or minus 1,000. And we got to 24,700, off by $250 out of 25,000 is close enough. And it starts to look good. We're going to track for 5 waves up. I want to see 5 waves up on the smaller time frame to be more certain. 3 waves up is still okay if we are dealing with some diagonal, but it decreases the certainty of a new rally. So I'm going to go over a few altcoins, but primarily focus on Bitcoin and Ethereum. We got to address the 800-pound gorillas in the room, which are Bitcoin and Ethereum. So I still thought that we were in a B wave lower, based on the weekly monthly charts, to 23.5 plus or minus 1,000. So yesterday we got 24.7. Is it close enough? We're going to monitor for 5 up. Ethereum, I also thought we were in a B wave lower, potentially a 4th wave. It's fine. Then we can still get a 5. 5 or C, potato, potato, higher prices is what matters. How we then label it is something else. That's fine. We'll deal with that as a semantics issue. So we thought 1,500 plus or minus 150. Possibly the triple digits if we see this larger C wave lower, meaning a impulse. Now, the impulse is pretty much dead because of the overlap we're seeing. So no impulse lower, but instead we're going to track for an impulse higher. We got 1623. So I was looking for technically 1650 to 1350. Okay, that's what I was looking for. I can't narrow it down more than that at that point. And the ideal target would have been 1670. Remember the C is A relationship, so we got awfully close. I also want to cover the mining companies Mara and RIOT because their corrections look complete. And for both of them, as long as yesterday's low holds, this of course goes for Bitcoin and Ethereum as well, we must see breaks above resistance to confirm we're going higher, $14 to $15 on Mara, $17 to $20 preferably on RIOT, but RIOT has a little bit more work to do. ETHE and GBTC also look very good, and I'm going to cover those in a moment. Remember, stop losses, very important, okay? Very important. Cut those losses. If you're not willing to sit through a 10% loss, you got to take a 90% haircut and deal with that one. And that's not what we want. So I'm tentatively starting to look higher. We start off with Cardano. I still think Cardano needs another 3, 4, 5 sequence to kind of complete in the 15 cents plus or minus 5 cents region. But we're getting awfully close, okay? Awfully close. We bottomed at about 23 cents. So it's getting awfully close here. So also here from a risk reward longer term point of view, I think it's skewed towards the reward. Similarly to Avalanche, looking for a last 5th wave. And remember, this last 5th wave can be a failed one. So that means that we're not going to make a lower low. We are very close in this ideal target zone. So also this one starts to look pretty good. I have no signs that the low is in place. That requires a rally at the minimum back above 1345, which has been our support zone for quite a while, and that got broken. So support is now resistance and needs to get reclaimed. That then leads us on a rally back above the 50-day and 200-day simple moving average, but it's getting close. For those that do like to not be bothered with daily scribbles and all that stuff, please keep that in mind. No buying or selling recommendations. I still think we could go a little bit lower, but in my humble opinion, the risk and reward is skewed towards the reward side of things. Bitcoin. So here is Bitcoin. The red is the ideal wave C target zone of this correction that we've been in since April. The gray is the ideal gray wave C target zone, and the black is the ideal B wave target zone, which we can ratchet up to about 38, but preferably the ideal is 50 to 62%. Okay, we could have done enough here. This starts to look pretty good. We're holding this support zone between 24.5 or 24 and 25.5. And we got very close, right? We were looking, we said, okay, you know, we have all this confluence of all these target zones based on Fibonacci extensions and retraces, all that stuff. Let's find a happy medium. And the happy medium was 23.5, somewhere around the 50% extension. And we give ourselves a little bit of a leeway, right? You got to do it because you cannot nail it to the exact dollar. And that has worked reasonably well. We're stuck still below resistance. And I want to see price, of course, rally above 27.5 to confirm the low is in place. But this starts to look good. And as long as yesterday's low holds, the low is in. Shorter term, I am tracking here for 5 waves higher, 1, 2, 3, 4, and 5, based on the ideal Fibonacci-based impulse pattern. Okay, so I really don't want to see price go below this potential wave 1 high at 25,738, because wave 4 and wave 1 are not allowed to overlap. 1, 2, 3, 4, 5 is what I want to see, and that would definitely help us confirm that the low is in place. All right, so the June 25th low, 15 low is here, and we then looks like a impulse higher. In my own opinion, 1, 2, 3, 4, 5. A, B, C lower, and now we're starting to impulse higher once again, and the technical indicators look pretty good for that, but we need to hold 25,738. So this is what we're going to track. So this is the initiation move, potentially. If we only get 3 waves higher, then we have to revisit this wave count, and we're going to keep on subdividing higher. A, B, C for A, B, C for a B, and then A, B, C for another C wave lower. Okay, so we can always subdivide lower if this is a ending diagonal C wave. Please keep that in mind. That's why we need to see overlap, critical overlap on a upside potential, and definitely no overlap on the downside, because then we only have 3 waves up. So we're tracking and monitoring it. Same for Ethereum. Ethereum's target zone here in black has been on this chart forever. And the CSA relationship in gray and the CSA relationship in orange of different wave degrees, we're looking at around 1670, 1640, I believe it was, ideally. Right, so we got a false breakout so far below support. That was yesterday and the day before. Can always happen. Most likely it's a stop runner if one would look at from a the market is evil perspective. I don't think so. It's just, you know, arbitrary where you kind of place the support level. We could have placed it a little bit lower, and then we would be okay. So, you know, right, if you say, okay, we're going to look at closing prices, so this looks better, that looks good there, and then we held it perfectly, right? We held it here. Here we got a little bit, so it's all a little bit arbitrary in that sense, and it's definitely a little bit better maybe to say, you know, from a technical perspective, you want to give it a zone, right? You kind of want to give it a zone, and that zone held. So we held the support zone in that sense. So don't always get too hung up on horizontal levels, but we need to break back above 1740. Okay, 7040, over 7040 minimum requirement. Suggest low is in. Okay, that's the minimum. Then of course we need to break above all these resistance levels one by one. So it's very early days, but for those that want to be extremely aggressive, as long as yesterday's low holds, we can say this correction is complete. Then we have done a nice ABC type of, I would say, double zigzag lower. Fine with me, whatever you call it. Pretty oversold on technical indicators. Remember when we were as oversold here in March, the low was in place, and we're similarly oversold now. Okay, and those type of oversold levels we have seen before. I'll show you that here in a minute. So we have to use some references on how low can things go. Doesn't work all the time, but you see here, low was in place. We got a decent rally out of it. Low was in place, decent rally. So this suggests the low is in place. So aligns quite nicely. I'm going to review Polygon here. Still think we need another 4 or 5 sequence. But if not, and if we go back above 74 cents, it starts to suggest the lowest in place, and then we had a filled fifth of a fifth wave. And that's no surprise, that can happen. Then we simply have run out of selling pressure and moved towards buying pressure. But again, we're below the cloud, below the 50, above 200 days, so the trend is still 100% lower, zero sign the lowest in place. But we are on watch, and that's why we had the slide that we are tentatively moving higher. We're kind of hanging in there, right? We're hanging in there, so it's not too bad. And that's what you have before to be a early warning sign of good things to come, and also a early warning sign of bad things to come. The masses are always too late. Why? Because the masses are occupied with other things, and the masses are always occupied with their own little emotions, and those emotions are wrong 9 out of 10 times. That's why financial markets work. So that's why we have technical analysis to be objective, and we need to say, well, above or below these certain levels are needed to tell us that a new uptrend or a downtrend is in place. On to ETHE, it's like the ETF for Ethereum. Please remember, BlackRock has lambasted the cryptocurrencies for quite a while, and now they are going to propose a Bitcoin ETF, I believe, maybe even an Ethereum, a true one, different than the Grayscale Trust, because the Grayscale Trust is a OTC market vehicle. So never trust the big bankers. They're always full of, you know what, when they say A, they mean B, but that's politicians in that sense. When are they lying? When they start talking. So we can have completed wave 4/B. 4 would then be a leading diagonal impulse here, A 1, 2, 3, 4, 5. I prefer actually the ABC path. Starts to look a little bit out of shape for a leading diagonal. Again, we need, of course, to break above resistance 8.5 to suggest the lows in place, and of course, definitely above 950, because that gets us above all the moving averages in the cloud. And for now, we're still below most of them. So tentatively, low is in place. I do like GBTC here. Very strong reaction, as you can see, off support 13th, and this can still be a wave 4. And as you can see, if we clear 1625-ish, I think it's an all clear sign, and we are off to the races into the 2025 for wave 5 of C. Okay, this is, of course, we don't know if it's going to be a there. So this starts to look pretty good. Okay, I like it. We had lots of positive divergence, and I didn't touch upon these, you know, ETFs between parentheses before. Why? Because there was nothing good to tell about them, other than they were below the cloud, below the moving averages, and all that stuff. So now we're busting above them. So now we have confirmed positive divergence. So now the trend starts to change. It's okay if you don't nail the bottom. For anybody who wants to go long these ones, just make sure that you have your stop in place at the previous low. This is now the most important low. That's my humble opinion. I think my trading systems will go long GBTC today, and they will place the stop then here. So if you then say, I don't want to lose more than X% of my portfolio, let's say you're going to buy 1,000 shares, which is about $15,000 you put in, then your stop should be here at about 12, and it means that you are willing to lose, yeah, $15 to $13, $2,000, with a potential gain to $6,000. So you have a nice risk reward. That's the risk reward you're willing to play. But that $2,000 should not set your trading account back more than, in my humble opinion, 1, maybe 5%. It depends on your risk management and your risk appetite. This is how you do it, okay? Nothing else. Because if you put all your eggs in that one basket, you lose 20% of your entire portfolio. It's way too much. Right? Small gains. It's all these first and second base hits that make baseball the winning game, and the occasional home run in between. Don't go all in. All in always leads to disaster. Always trade the same amount of money. So that's kind of a trading suggestion. Then we're going to look here at Mara. Mara looks pretty nice. We've held support here for quite a while, but we need to break above resistance to confirm that we're going to go to $14 to $15. So it's still stuck between a rock and a hard place that we've been in now for 2 months. And eventually the market will make a decision on where it wants to move. I think the decision is going to be higher. based on the cryptocurrencies, because of course the mining companies rally if we're going to be higher in the cryptocurrencies. RIOT has the same. It's still stuck here below support a little bit. I want to see it above 1050. Now the wave count was really uncertain and quite obscured by all this overlap we've had. I thought we would have a triangle A, B, C, D, and then E, and a triangle broke apart, and it looks now better like an A, a B, and then another A, B, C with a 5-wave C of C wave, okay, or a C wave. So here we have 1, 2, 3, 4, and then an ending diagonal of 5. And we have enough scribbles in place, 1, 2, 3, 4, 5. So this looks still good. We hold yesterday's low. We can move higher. I want to see price break at least above this resistance level here at around 11.50. And then, of course, ultimately above $13 to tell us we're going to go to $15, $20. All right. So that's really all I have for today. Short, sweet, and simple. I think we are looking a little bit better on the cryptos. Okay. We got close enough to the ideal target zones. They're always, it's a zone for Bitcoin and Ethereum. I can't narrow it down more than as such. So close enough. We're going to track for 5 waves up. If we get 5 waves up, then the next pullback will be a fantastic buying opportunity. So we're still a little bit early days. That's why we're hanging in there towards the upside. Mara, RIOT look good. ETHE, GBTC also look good. And some of the other altcoins, I would still like to see another 3, 4, 5 type of, or 4, 5, 4, 5 setup, sometimes lower. It's not necessary. Start thinking about the longer term risk reward where we currently are at. But I think the focus should always be on the 800-pound gorillas in the room. I know the altcoins can have much larger gains, but don't be greedy. Don't think of the gains, only think of your risk. The altcoins also possess a lot more risk. Bitcoin and Ethereum don't. Same with Mara and RIOT, ETHE and GBTC. They don't possess as much risk. And risk is all you need to manage. It's all that we care about during trading. So that's all I have for today. I hope you appreciated this update. I think things start to look up and good and better. I can't say that I've been this bullish for several weeks and months now in a row. So forewarned is forearmed. You got this. That's what you got before, to tell you as soon as possible that things have improved to a point where we are now starting to become more bullish. Have a great rest of your weekend. Take care, trade safe, and I'll see you all next week.